How's it going, everyone? Today it is Wednesday, April 10th, 2024. Let's take a look at RCL from yesterday. So RCL should have been a no trade, and I want to tell you why it should have been a no trade. So we had this strong move down, this leg lower, some really nice relative weakness over here, but stock was grinding up and it wasn't able to really make any sort of breakdown later in the day. So we had this long-term trend line. We got the breakdown here, right? So if we look at the market at that point at 245, we seem to be ready to go. And perhaps you could have taken it over here, perhaps you couldn't, but I didn't quite get the long red candle that I wanted to on this sort of bounce. It didn't give me that conviction, and then we were quickly erased and we started to make a new high of the day. So I didn't end up taking RCL because to me this move just lasted too strong and it gained a lot of relative strength. I mean, the market was moving all the way down from 1235 to 1245. If you look at RCL from 1235 to 1240, I'm messing up my times here. 1235 to 305, right? So about 2 hours. So in those 2 hours, the market was going down. This stock was going up. When it started to crack, to me, it didn't really have that selling pressure anymore. I think if there was very strong selling pressure, it would have resurfaced itself. What happened was probably the stock just got way too far ahead, and then some buyers came in and stepped around. Again, because we are trading on a little more stronger D1 chart, I mean, there is a chance that, look, buyers defended this level over here and we started to move back up. So I think that chance of reversal was high, and no trade for RCL. All right, so let's talk about today. Let's talk about our market fundamental bias, what changed. So I've been saying it's still on a fundamental level, still a 2 bullish. So out of -3 to 3. For people who are new, that's kind of how I am categorizing how bearish or bullish I am. And it helps me gauge in situations where I see price action and I don't immediately flip. When I was starting out, and I think today was a really great example, where I could see this move and maybe I'm max bullish, and then I see one red candle and then I'm max bearish. So if I look at my scale, I'll be flipping from a 3 to a -3 really quickly. And it's because I wasn't good at reading price action, and I'm much better at doing that now. So when I had this spectrum from -3 to 3, I can start to gauge and use the price action to put myself at the right spot on that spectrum. So when I see a move like this, right, I know that this move up is very different from this move up because the price action is different, right? We have some decent movement, but we have heavy volume, so we know the ranges are going to be bigger, but there's some selling over here. There's some volatility, so there's some red candles, there's lots of tails and wicks. So if there were not as many sellers, or if buyers were more aggressive, then we wouldn't get this type of price action. Now, similarly, on the way down, I said that we have a good bearish engulf. We have some more organized selling on the way down, so it tells me that sellers are more in control on this move than buyers were in control on this move. And that's because sellers were lurking over here on this level up. When the price reached a sufficient enough point, sellers got some reinforcements and we started to move down a lot lower. So that's how I sort of orient myself. Now, on a fundamental basis, I think it's a lot harder, and I'm obviously still getting better at this. But to me, I think what Hari was saying in his post is that there is a story to the market on the fundamental side. We're driven by the bottom line. We know that interest rates affect the bottom line, and we know that the interest rates and the hikes have been from inflation. I think that is really the TLDR of the market fundamentals. There's other stuff you have to take in consideration. There's, credit crises. There's some stuff in China. But I think that's a TLDR. And I think that this is kind of the story for the short-term context today. So let me flip back. I'm always flipping back in my videos over here. Our longer-term technical level, if we just look at the chart, we have no idea what's going on at the fundamental level. Again, nice steady price action. We're moving up nice and high, and then, this is a huge 5-month rally, and what we're seeing over here is that in this last month or so, so if we take it from, March 8th, March 12th, over here, February 10th, February 12th, market has been flat. We haven't actually made any progress month to month. And maybe a weekly chart will show that a little bit more clearly. We're just starting to consolidate over here instead of having gains each week or even every other week. So my technical basis is a 1 bullish, maybe leading even more towards a neutral. We would have to see, I think, what happens on a dip over here. And then we'd like to see the response after the dip. So if we get a really deep retracement and then we get a weak move up, that would get us more bearish. If we get a very tiny retracement, like let's say we test the 50 SMA over here, and then we get some like really nice big, like a really nice move up, some gap up, some green candles that make a new high. Okay, like that would get me more bullish because we know that buyers have been aggressive. We know that this long-term trend is still preserved, but just not as strong as it was before. I'm trying to get better at having more future scenarios on the daily chart. Pete's bulletin today was talking about how, he's looking at, hey, we could be horizontal, we could see some weakness, we could not really see a high until after the election. So he's kind of putting all these things in play, and that's something I am certainly working on. And I'm going to try to do that in the next couple of videos. So long-term fundamental is 2 bullish, long-term technical is a 1 bullish. And what that allows me to do is lean on my put credit spreads. I know I don't have to panic out of them because we don't have a technical breakdown in the market. We have a bid into earnings, and we have mega cap tech earnings coming up. We have bank earnings coming up at the end of the week. So at least because of that, I don't think the market should completely crack, and it gives me some cushion on my put credit spreads. It should give me some time on those. I don't have to force any trades. I can do that. I can look for some day trades and see what unfolds. And then if we get a pullback and let's say we get a pullback and then we get some strength after the pullback, we know that asset managers are buying the dip, then I can feel comfortable taking some great swings, which I do love to take, absolutely love taking them. But I don't have the market confidence to really take any swings in either direction. Now, short-term market bias. I was trying to zoom in a little bit here. No one really uses institutions don't really use the H1 chart, but I like to just see the trend, right? What's kind of going on here. And past couple of days, they move higher, test this level, big gap down, test this level, big gap down. We try to erase some of this move, or not big gap down, big move down. Taste this move, compress, big move down. So it's really getting pretty choppy, and there is sort of a slight bearish bias. You can see a pretty wide channel starting to form, and I think that should orient us a little bit to the fact that there is selling pressure here, and we're not able to really get to these highs like we were able to earlier in this stage. So because of this, my short-term market bias is maybe a -1. I'm slightly more bearish on the short term. I'm not overly bearish because we still haven't quite seen any sort of crackdown, and we're still getting pretty big moves to the upside. I just think the moves to the downsides are on heavier volume. They're faster, they're more organized. So my bias leans that way, and the overall trend on a larger time frame is slightly downwards. We're making some lower highs and lower lows. Now, I'm not too worried about any buying climax or the bottom falling out right now. I am concerned for a pullback, so that's why I'm definitely not putting on any long swings. But because, again, there's a potential bid into earnings, I also don't want to put on any short swings because I don't quite know and don't really have a good opinion on where the market may go in the short run. So taking it more day by day. I think swing traders should remain sidelined. If we do get any sort of move, I think the best you can do is try to do like an overnight swing. If we get some move over here, but moves tend to not have continuation when we're sort of chopping around, because sellers are strong one day, then buyers are strong the next day, then sellers are strong. Like this day, in April 9th is a great example because sellers were really strong early, and then buyers ended up kind of catching a bid, and we moved up higher. So there's a lot of kind of reversals And you have to, I think, size down, be a little bit extra patient, and be mentally ready to withstand some heat because there's more volatility, because there's more volume. And to be perfectly honest, I just rather not be in that situation. Especially if I am sizing up, but if I'm doing a one contract deep in the money call, there's no way I can do half of a contract. So I would have to do shares, which I can definitely do. And I think that is perfectly fine. But to me, it's just not quite worth the overnight risk. And I'd rather remain more sidelined with cash rather than trying to manage and, take heat on a whole bunch of different positions. So that's what I say for a swing trader. I think trade small, either be very nimble or be ready to take some big heat and then get out of your positions. I think having some more passive targets, it is still possible, but I think it's just a lot more difficult mentally. And to me, there's more opportunities coming up on the bear side than the bull side in terms of great D1 charts and great D1 breakdowns. So it's sort of biasing me to that side. Let's look at the price action today. And I'm going to talk about the components for the market first. So I always kind of look at what's going on with the mega cap tech. Whoops, I have the dollar change over here, which is not accurate. So I need to change that. But mega cap tech, I think, was actually decently strong relative to SPY. There were some, put it over here. Let's edit. These new templates, by the way, are really nice. Okay, here we go. So this is what I like to see. So you can take a quick glance and say, look, mega cap tech was actually decently strong relative to SPY. We got a couple of more stocks above. I mean, Meta and Nvidia are green on the day, which is pretty crazy considering the CPI. Amazon and Google are holding their gains well. Tesla has been pretty weak. Microsoft took a little bit of heat, and Apple has been pretty weak, but not too bad for mega cap tech, all things considered. Next thing I look at is just other stuff with the market strength. So here's some other tech sectors like comms, the actual tech ETF, right? Oh, J&J's moving. QQQ. So look at some of these different areas that kind of slice and dice tech in a different way. And I see, look, are they generally lower than SPY? Are they generally weaker than SPY? So there's a little bit more weakness in tech, right? Semis are a little bit looking a little bit weak today. It looks like Nvidia is an exception. XLK is a little bit weak. QQQ is slightly weak, but it's kind of in line here. So, there's probably some other stocks that are, in this weird sector crossover that are bringing it up. Other thing I look at over here is TLT and IWM. So TLT has been a pretty, this kind of big wide bearish channel. I wonder if it's going to show, it looks like it's not showing it over here. So as a decent, sort of fundamental aspect to it, this is bond prices. So bond prices, when TLT goes down, it means that yields go up. When yields go up, it's a more attractive investments for institutions, and they start to pull money out of equities and put it into those bonds because, look, they're trying to maximize return, and stocks are not their only option. So TLT has been a nice steady grind today, so it's going to at least put a little bit of downward pressure on here. And then some other stocks that are just generally are kind of signals of market strength, right? So I'd like to see IWM be strong today. RSP is kind of an equal weighted stock. So when RSP is lower than SPY, that tells me that there is generally more breadth to this move down. So you can see it's a little bit weaker, and that tells me that more sectors generally are doing worse and, bringing the market down versus sectors that are bringing it up. And if you look at just kind of the sector ETFs, it really tends to match that, right? SPY's down, let's see, 1.2%. Most sectors are down by more than 1.2%. So again, another way to just kind of gauge, hey, is all these things adding up to what I'm seeing in the move? I look at some flight to safety, which is VIX. So VIX is obviously pretty high. It's not been the best gauge, I think, because, and there's a whole video about it, but one of the potential theories is because of daily options on SPY, so it's kind of suppressed some volatility. VIX is not making these outsized moves as it used to, but you know, it is still, it's not like it's, I think, as broken. I don't know, it still moves up. I like to keep an eye on it. These other things are still in flux. Like Bitcoin has been a flight to safety in the past, but it's not I think a true flight to safety. It can do really, really well when the market is strong, as you can see in this and also the other stocks like MSTR, Coin, Mara, Riot, things like that. And also staples and utilities. So if staples and utilities are doing pretty well, then it tells me that there's some money going into these flight to safety assets. So I expect these stocks to do a little bit better on these down days. So, and also gold as well. I don't think, again, gold is a perfect one, but you know, this is still in sort of flux. I just like to take a look at it. All right, let's look at support and resistance. So on the daily chart, first support level is this low 512.76. If you look at the low today, it was actually, I guess, we pretty much hit that level and we bounced off that. So that's the first level of support that I see for the market. I also drew this upward sloping trend line over here. I thought it seemed to have a lot of touches in the short term and seemed to be relevant. So obviously we broke through that through CPI and news catalyst, heavy volume, change in the market story. That is the things that are going to have technical breakdowns. So that is the first level support. And then I really don't see a lot of support. I'm trying to see anything, you know, horizontally. Maybe there's a low minus trend line or something coming to play, but it really seems like there's, you know, free range here until the 50 SMA at 508.59. So that would be the next level. So I think if we do get a close below this level here, we make a new low of the day, we're able to get through this D1 resistance or support and make it into resistance. There could be an opportunity to take an overnight swing on shorts. So that would be a nice setup on the short side. Now let's look into the day trades for today. Let's look at what the market has done. So we had the CPI overnight, and let's talk about that a little bit because it affects the story of the market. Look at the after hours chart. We had a strong reaction yesterday or into the close, and it was kind of just like all of this stuff like never happened. Like if you take away all of this thing and it was just a flat day, the market pretty much closed very near its open. So very big bullish hammer on the bar. So we held all those gains overnight and the market was just waiting for its CPI. So CPI came out, it was just slightly hotter than expected for every single value, but we had a huge correction or a drop in a matter of minutes. I mean, this is like the fact that we have a really heavy volume bar on this move tells me that this is pretty significant, because even these after hour bars tend not to be that like this volume spike usually does not match what's coming up over here. So big drop from CPI, it's being hotter. And the key thing that I saw, if I bring up the Fed watch tool, I think this is a nice thing to see. So the key thing is that they are pricing in rate cuts later, and there is a greater chance of 2 rate cuts instead of 3 that the market was expected. So if you listen to anything that the Fed was saying and Powell was saying, he was like, hey man, like this is going to be higher for longer. Market was like, you know, I don't really believe you, even though that's exactly what you're saying. So what you can see here is, here's our current rate, right? And you can look at, this is yesterday and this is CPI, right? Now the CPI came out, here's the current rates. And this is data as of 9:30 Central Time. So, you know, it's like it doesn't have to be the most accurate. As long as a couple minutes after the market, a couple bars close, you can get a gauge of this. So before CPI, right, this isn't really changed. So it looks like, hey, nothing changed for the May meeting. We priced in a no cut. We priced in just no action here. This is the true change. The market had priced a little bit more than 50-50 odds of a cut in the June meeting. And now it's pricing in an 80% chance of a pause, or sorry, of no change in the June meeting. So that was the first significant change. July initially was like, hey, we are for sure going to get a rate cut by July, maybe even 2 rate cuts. So 75% chance of a cut. Now it's looking way more likely that we pause. So now that's pushed out. Let's go to September. Now, by September, initially yesterday, the market was thinking, hey, there is no way we're going to get to September and not have a rate cut. Like, it's like over a 90% chance we're going to have a cut. Inflation comes out, still a little bit hotter than expected. Now market's like, oh, you know, it's like 30% chance we could still be there. So the market is coming into terms, I think, with what Powell was saying. And I think what I believed was like, we're not going to see a cut anytime until at least the summer, until after June. So it looks like now the market's at least pricing in a decent chance of a rate cut by September, which is possible. I don't know. You know, I don't know how the inflation is going to come out. We're going to keep an eye on that. I'm going to keep an eye on what the Fed says with the rhetoric. But the Fed was like, hey, look, this is going to be a bumpy road and economy's strong. We're prepared to hold rates. So that's what we're going to do. And I think the selling we're seeing here, the market is a forward-looking model. So it is always, institutions are always trying to say, what is the best way that I can make money? And the price of the market reflects the sentiment of investors several months out from now. So people only buy because they want the market to go up, and they only sell because they believe the market's going to go down. So, you know, that's sort of the high level concept of what's happening. So news catalyst news catalyst, big drop down. Test this major D1 level over here. And the long-term macro context, again, I don't think this doesn't change my fundamental bias because the economy is still doing pretty well. But it is, I think, just again, the market coming into terms with what the Fed has been saying for, you know, the past many months, or pretty much since this whole stuff started. They have been hawkish. All right, let's get more into the price action stuff over here. Intraday. So we know that our market components is on the more bearish side. You know, things are generally looking pretty weak, but mega cap tech is not doing as bad. So that's kind of a little bastion of hope. My intraday bias is a -1 on the M5, and I'm going to explain why. So we have this large gap down, which is better for buying, not as great for selling because we don't get that risk reward profile that we like. But the nice thing is we didn't get a gap and go. If we got a move to the upside, and that helped us two things. One, we could gauge the strength in this move, and two, we can find stocks that we can short, right? Because when this move goes up, it's really easy to identify these relatively weak stocks. So move came up, we held halfway of the gap, we probed into here, bearish engulfing candle. Okay, that's a nice sign. There was a nice divergence on this, on one of P, so I was respecting that, but we know that our shorter term market bias is slightly bearish, so we're already leading towards that side. We got a gap down, we got a decent move up, we have good volume, and we have sort of a little bit of a bearish news catalyst. So that's all coming into play. The 1-up cycles, again, like I said, were bearish. And the second thing I was determining was, is this going to be a trend day or a range bound day? Now, if it's a range bound day, I'll also have to see how big the range is, right? If we have, like if I go back to something like this, right? If we have tiny ranges like this, you know, that's not really an ideal range bound day. But if we have, and I know this wasn't the best example, but let's say we had this and then we had big ranges going back and forth here. All right, I mean, there's more movement, there's more space for us to ride day trades. So I'm okay with that kind of range bound day. There's a lot of, the range is big. So I can feel confident in having moves having some sustainability when I enter them at the right point. Now, we could see a trend day. We have sort of had this benign bullish cycle over here. We're close to the low of the day, but this is a major D1 level. So I want to get gung-ho about it. We have some starter positions on. If we break through the low of the day and we confirm it, right? We have to really just smash through it. We can't we can't just poke above it, right? Trigger some sell stops and then see a bearish engulfing candle. So if we really get through it, then we can add to our stocks and we can ride the move down, because we know that the next level of support on the D1 is going to be the 50 SMA. We have plenty of room to that. So if we get that, we do get a nice trend day, and we could get some nice gains on a day like this. Now, if we fail over here at the low of the day, I'm kind of looking for two things. So first, we could see a bounce. I would like to gauge how tall the bounce is. So if we get like a big bounce up above this prior day high, we get some more organized buying, then I'd probably flip to more of a one bullish, because hey, it tells me that buyers are still defending this level, and at least for the short term, we can be bullish. I don't know if any trades would set up, but that's what I would be looking for to get me at least mildly bullish. Now, if we do bounce over here, but we're kind of hitting VWAP and we're just sort of rejecting and shopping around, that tells us that the selling pressure is on, right? Because buyers can't get the price up very, very high. And I think what it'll turn to is one of those late day bear trend days where we have the selling pressure, we have some buying, and they're fighting, but the sellers are still maintaining the upper hand because they're keeping price between the low of the day and VWAP. So every time buyers move it up, they're going to smack it down, move it up, smack it down, and then buyers are going to throw in the towel. And then when they start to get out of their long positions and they get out at the low of the day, short sellers are going to hop in on this trend, and we're going to get some acceleration, and that'll give us the momentum to break through the low of the day and continue onwards off the low of the day. If any people who have entry points over here, right, all these buyers coming up over here start to bail on their positions. So that's kind of the two things I'm seeing over here. The other thing is that, like, we could just, again, we could have these moves here. The market could go to the middle, and then this day could just die on a vine. We could just chop around VWAP, go absolutely nowhere. And the nice thing is, like, it would not be terrible for your positions. You have good entry points. The low movement tells us that the market's not really going to help or hurt you. So as long as the stock is putting in work, it has volume, it has movement, you can stick with it. If it doesn't, then you can get out of it. All right, so that is our bias here. I kind of outlined some scenarios, and I think the ideal scenario is if we were able to break through and make a trend day on the bearish side. That would have some nice opportunity for gains, for adding into gains and sticking with positions. Let's try to find some trades. Now, I've been using this new template quite a bit, and here's one thing I'm trying out today, which is I'm going through Red Royal Flush, which we know Red Royal Flush always has pretty nice D1 charts, and these are all sell signals on multiple levels. Now what I've done is with the different templates, so if I go to the edit columns and you can choose different templates. So I've made two. I just made these today, but I'm gonna try to make more. And I want to make percent change. Do not care about the dollar change. So create new template. Let's call this day. Let's call this day trade. Okay. Okay. So I already know that these have really nice D1 charts, and now I can look at this and see what's going on the intraday basis. So you can see I have a lot of stuff over here. I'm going to play around with what works and what doesn't work, but generally what I'm looking for is lots of red dots, volume, and lower end of the range, and volatility. So I know something like VFC, it has a volatility of 163. It's really moving quite a bit versus normal ATR, and I didn't check what happened. It looks like there's a lot of volume. I don't know if it was earnings. No earnings. Okay. Next one over here, WBA. This is a beautiful setup. There is I think a fairly significant low minus trend line, so that's the only thing that I would be cautious of. But it's really weak stock. I mean, it pulled back to the 8 EMA, broke through here. This is a solid HA reversal candle through the prior day low. And I think healthcare has been weak, so just an absolute gem. And this is the ideal, to me, this is the ideal, one of the ideal the day trading setups that I like, where we get these long red candles on the open. We get this early check of the bid, and we hold most of those moves. So even if we hold the more we hold of the move, the lower we're going to go. If we retrace all the way back up to here and then we start to grind lower, we could still move, but we wouldn't move as much. But I liked how we broke through here and we're chopping around and we're gaining relative weakness, especially as the market is going up. So as it's grinding up all the way to 1030, right, this stock is flat. As soon as the market has this bearish engulf and now at least starts to give us some tailwind, this stock has really steady selling, hugging the 8 EMA on heavy volume. So I can really easily identify this setup, and I already know that the D1's good and the M5 is looking great. So you could probably even still take this. Again, just be wary of that low minus trend line if it comes into play. You know, don't overstay your welcome on that. So WBA is very nice. J&J, I got an alert earlier. Now J&J, another healthcare stock. Let's look at the D1 first. This is a nice breakdown. It is a choppy stock. So yeah, I mean, we're day trading, so I don't think it's the end of the world. You can see here how we moved down some long red candles. We got a pullback over here, so I think still weak, but not as weak as something like WBA. And then again, as soon as the market starts to give away the gains, we make a new low of the day. So J&J is it's pretty decent. It's not the best. I think it's kind of a choppier stock. I want a more steadier stock. I know Pete called out this pick earlier in the chat, and yeah, I mean, he called out this pick at like 10:05. Like, this is, I'm not going to take his pick for the video, but it's just like an absolutely insane pick. Weak D1 chart, broke through the SMA over here. And it's just, this is just like absolutely beautiful price action. Same setup, right? Long red candle in the open. Now we don't retrace that much. We have a tiny compression and we even start to move lower as the market is moving higher. This is what I love to see. So you have a pullback over here, some move. So when it breaks this low of the day, again, you have another entry point. So you can enter right over here. You can enter over here at 1010, put a starter position on, and you can add to it when the market starts to confirm. Or sorry, the market starts to confirm and the stock is doing what it wants it to do. And we're just absolutely writing this down. We have plenty of room through this level. We broke through that level. There's a little bit of support. And that, to me, there's no other resistance until this low over here from Jan 25th. That did have some very, very high volume. So we would want to respect that. Oh, look, there's RSG. So yeah, CVS, not going to take Pete's pick. I'm not trying to copycat, but that's a really, really nice one. So this is a pick that I took today, and I missed the entry earlier, but then I got another entry later in the day, which was BA. So we know BA again, super weak chart on the daily. I'm not going to swing BA because it's pretty choppy, and this stock has these, it's very newsy, has big, wide trends. So not in the business of swinging it, but I'm happy to day trade BA if it sets up well. We know there's a lot of momentum on this stock. Now, we didn't get the long red candle, but we got like a weaker version of this. Maybe on an HA chart looks a little bit better. We got this move down. Then we test the bid. I'm pressed over here while the market was moving higher. As soon as the market paused, we started to move lower, break the low of the day, compress a little bit, and now it is continuing to move down. So again, very steady price action on this chart, heavy volume, relatively weak. So that's sort of the pattern I'm looking for, because if a stock goes absolutely parabolic, like we look at RCL yesterday, I want to enter on a pullback because we don't have this early bid check in the day and we don't have sellers to support this move. So here's a great example, right? WBA bid check earlier, and then we start to grind lower. Then let's look at RCL yesterday. Right, we have the strong move, but there's no bid check. I mean, there's really strong momentum, and you'd have to be chasing the stock. And that's why I set this LRSI alert. I wanted to see a pullback on a parabolic move and then rejoin the trend at a better price and on a higher chance of a cushion because the stock is more likely to move in my favor. Okay, INTC, let's take a look at this guy. So you can see this is a little bit choppier. We don't quite have that, that setup that we like. Lulu made a nice move. It's choppier, but it has a really nice D1 breakdown. AAL is coming up over here. Let's see AAL. Okay, so we had some compression over here. We didn't gap down, which is actually good because we have a lot of room to run. Let me check how this is looking on the M5. It's a pretty nice breakdown on AAL. Choppy stock again, but We broke through the short-term support right over here. There's certainly some support at this level. I don't see any next level. I mean, maybe somewhere around here there might be some support. So we certainly have some room. I don't think this gap is going to come into play below this low on the short term, and we're picking up some steam here. So I like this. I'm going to set a HA reversal alert. So let's see if I can get an entry on that. I'm also going to set an LRSI alert depending on if we do have a range bound day. If we get maybe a bigger part of the gap, then I'm going to get in on that. But yeah, I mean, I think for day trading, I'm going to go with BA. That's the trade I'm in. So I'm going to stick by the trade that I took. So I took BA around here. Let me add that to the picks. And this is always so much harder as a day trade because I can't, like, the next day you have to come in, like, I can't give the exit criteria on the next day, or it's just, I'm obviously going to exit on this day. So that's what I'm doing with BA. And, we'll see how my day trading picks do because I'm trying to work on my day trading. But I have been consistently profitable day trading in bearish conditions. We have some more volatility, some more ranges. I love the short side. So I do feel a little more confident in that setup over here. And I'm going to explain why I like BA right now. And I'll explain my setup. So let's walk through just the kind of the list that went through my head. So, and I'm actually going to pull this up over here. I have this notepad on just kind of outlining my trades, especially for day trades, as I want to be better. So I'm going to mark this up very quick. My market short-term bias, as we already mentioned, -1. This M5 bias so far is -1. Stock D1, we know it's a very weak stock, and the M5 is also very, very weak. Now, when I entered BA, this is where I entered. So it was compressing over here, and this is one entry point that I kind of missed earlier in the day. That's okay. Waited for my next opportunity. 11:35. So what happened at 11:35? Market tried to get back above VWAP, and we get slapped down to make a new low. So market setup was a VWAP rejection, bearish engulf. Okay, what did the stock do? Stock setup was a low of the day compression break. All right, so I like that entry point. Market expectation is test the low of the day. I think we can test it. We're going to see if we're able to get some support. Stock expectation is it's going to move lower and grind lower. And this expectation is important because you also want to outline how it's going to move, right? I know there's going to be some, there's going to be some tails and wicks, right? It's not going to be a crazy move, but sellers should remain in control. Okay. Now, when would I add to BA? I would add if the market, so market makes a new low of the day that holds, or we get 2, we could see maybe a weak bounce in the market on a range bound day, and BA remains weak, right? Then I could add on maybe an LRSI cross or an HA reversal, or even a compression break if it's really, really weak and it's just hugging the low of the day on that move. So right now you can see, right, market is getting a little bit of moving here. Market is flat, BA is going down. So BA is doing what it's supposed to do, and I still have some latitude to remain in the trade. Okay, scaling out. I don't have to worry about scaling out because, again, it's the start position. I haven't actually added anything to it. So, I can't exactly scale out of something. Well, I guess I could if it's like multiple shares or anything like that. But scaling out, I'm leaving it open for now. So when would I exit the trade? So I'd exit the trade when either my stock confidence changes, my stock bias changes, or my market bias changes. So right now, we know that my stock bias is 3. It's still -3. I still like BA. Market bias, -1. Has it really changed? Well, we haven't really done anything here, and we haven't actually broken to the low of the day. So there is a chance that we may see a little bit of a bounce here. So I am going to wait and see this bounce. So I need to see some sort of bounce that would get me at least more neutral. So my market bias changes to more neutral, then I'm less inclined to stick with BA I'll stick with BA as long as it performs. When BA starts to maybe falter, maybe starts to lose some steam, then I am going to get out of the trade. So exiting, again, it's going to depend on the market. So one, if my market bias goes neutral, I'm going to stick with BA as long as it is performing. So I don't want to see it stall, right? So no stalling. Okay. Now, if the other best case scenario, by the way, is if we have a market bear trend day and BA performs, right? Then I can stick with it and add and probably exit on the last 30 minutes of the day, because that's when buyers come to town. So the next section, I would talk about, hey, what happened? So I'm still in the trade, so I'm not going to talk about what happened because it's still happening, but you can say, I would timestamp it. So you can say, hey, look, I looked at, so 1 hour after the trade. So I took the trade at 11:35. Where is this over here? So 1 hour in, I can say BA is lower, market is flat. Right? Market hasn't really moved. And then when I exit the trade, I'm going to notice my bias over here. So my short-term bias shouldn't change. My D1 bias should not change, right? So ideally, this should still be -1. This should still be -3. One of these two things have to change in the stock or the market. And I actually haven't done this before. I'm kind of still working through how I want to construct these trade plans for day trades. But I think this will help me identify what changed when I continue to look back at my trade logs, right? Sometimes I'm just like, oh, I'm going to exit the position. And, what's the mistake? It's usually like, hey, my market bias flips for no reason, right? That's usually a big reason. Or, maybe I entered poorly and the stock didn't do what I wanted to do. I didn't have the confidence to stay in the trade. So we'll take a look at this tomorrow. We'll see how that goes. But yeah, so that's everything for BA. We'll take a look at this day trade for now. It's in profit. And tomorrow I'll conclude that part of the plan and I'll say, hey, here's where I exited BA. Here is why I exited BA. Did I make money? Did I not make money? So this is, hopefully I can repeat the performance on my day trading like I did on my swing trading for, January and February, and then a little bit more in March. March we had some transitions, so took a few more L's in those market transition periods. But let's see if we can right the ship in April. Very long video today, and I just wanted to say, for all the people who gave me support on this 2-year journey, I very much appreciate that. It was a long video, took a lot of time, had to write the script and edit the script and put the video together, and iMovie was being a bitch, so I got a new software and slapped it together. And there's still some audio stuff where it's like, audio could have been a little bit better, but I think in general, I just appreciate all the support. I'm glad it was able to help a lot of people. People said I was very inspiring, which actually surprised me. I don't really think of myself as an inspiring person. So I'm glad if it inspired you, gave you some motivation or gave you some structure. That was, I guess, the point of the video. And I definitely appreciate all the support. So anyways, that's the end of this video. We'll take a look at BA and some of the other picks later today, later tomorrow, and that'll be it. So thanks everyone for listening. Let's add this to our, actually before I conclude, last thing that I'm going to change. So RCL we never took. Let's update the symbol. Let's take a quick look at the charts. Amazon is in great shape. This put credit spread should expire weekless. Remember that it's not weekless, worthless this week. We're at the 172.50, the 170 put credit spread. PanW, I took the loss yesterday because I did not like the strength on a market down day, and I did not like how it broke into the gap. So PanW, we took the L, and I changed that in the chart. Alta, we're just keeping on. We're keeping tabs on just because I mentioned it as a pick, but we haven't really done anything with Alta. So we just have Amazon as the put credit spread, which should be a nice win, and we should have BA today. All right, that is it for the video. That is actually it. I got to remember to do that much earlier in the video. Thanks for listening, everyone, and I will talk to you all tomorrow.